we get better with every single investment we make. So we spend a lot of time focusing not just on what has gone right, but what did we learn from that investment, especially if we lead it? What could we have done better? What did we miss? If things do start to go sideways, we talk about how can we help them succeed, but also if there's something that goes too far, we talk about what did we miss there. In some cases, there's a lesson learned. In some cases, this is just venture, and there's a lot that you can't predict.
Hey everyone, welcome to Venture Voices, where we interview emerging managers within the venture ecosystem. I'm Richard Kerby, a partner at Eco Ventures, and today we have the pleasure of having Marcos Fernandez from Fiat Ventures. Marcos, welcome.
Richard, thank you so much for having me.
Yeah, no, I'm excited to have this conversation. Always enjoy chatting with one, folks in venture, but two, also passionate sports fans. We'll leave the sports questions to the end, but I guess just to give folks a sense of Fiat in general. Let's just jump right in and get a sense of what is Fiat Growth, what is Fiat Ventures, how do those two orgs work in tandem?
Yeah, definitely. I usually start by saying no relation to the car company, so we're not investing in automotive tech. Really, what we've done is reverse engineer the traditional venture structure. And what I mean by that is usually in venture, you raise funds that gives you the opportunity to be able to take on more employees, build out a platform team and support. We've kind of reversed that where, about 5 years ago, we started co-advising and working with these early stage companies. And that really ballooned and created this ecosystem for us to then invest in the best companies we work alongside and really see what's going on in the market at a ground level. And fast forward to today, we now have over 35 full-time employees. We've worked with over 150 companies. And when we work with these companies, we get monthly retainers and advisor equity, but also contractual rights to invest. And so it was about 2.5 years ago when we started to accumulate more and more rights to invest, where we realized we're in such a unique position to be able to make investment. We should not, proceed as scouts for other venture capital firms. We're leaving a ton of value on the table. Let's raise our own dedicated pool of capital and let's start to deploy that in a meaningful way. And we've been off to the races ever since, Richard. We've now managed just under 30 million in assets under management. We're currently in market raising our second fund. We're fortunate to have some really great institutional investors backing us and in our corners. And the best part of it all, as you know, is we get to work with some of the most thoughtful founders out there. And that's truly like for us, we consider the best jobs in the world, where we're just helping them bring their ideas to life, both through capital, but also through hands-on support. And when you see those success stories happen, there's truly no better feeling in the world.
Awesome. No, that's a great setup there, and glad to hear that Fiat does mean auto tech as well. And so it sounds like Fiat Ventures kind of grew from Fiat Growth, and so should folks think of like Fiat Growth as like a top of funnel for Fiat Ventures?
In some ways, yeah. What we do is we really set clear expectations that just because you're a Fiat Growth client of ours does not mean that we will invest, and vice versa. About half of our investments are in portfolio companies who we have had no prior relationship to, but who do want some exposure and access to that massive engine. So, over the last 5 years, we've accumulated now over 90 rights to invest, and of that, we've executed on 16 of those. So, again, just because we have them doesn't mean that we'll use them for a variety of different reasons. It may not be a core thesis fit, or potentially it's a little bit too late stage for our entry points. So, there's a lot of different reasons why we will and we won't, but it's certainly one of the best pipeline drivers for us. And it's for no other reason than this, right? Is when you meet a founder who's raising, they've often rehearsed that pitch probably about 100 times. There's a, really well put together pitch deck. There's a well manicured data room. And that's all really helpful in understanding the story, but like you're not getting the real. And that's when, something that we lean on when we work with them is we're focused on growth marketing and growth support. But you also get access outside of just product market fit to co-founder dynamics, competitive pressures. How are they thinking about expansion? How is that market evolving? How are regulators reacting? These are some of those intangibles that you just really can't interview for in a short term. You need to see it cycle and cycle and cycle again. Vice versa, Richard, what we've really found and has been great for us is because we build these deep relationships with these founders and they know they can trust us, they don't just want us on their cap tables, they want us on their boards. And that gives us a really good opportunity to build these meaningful relationships with those that we do see as having something really unique and special. And we're able to kind of preempt the market even, a couple months ahead of time because we know here are the goals that you're reaching for that next fundraise. You're blowing through those goals. Great. Let's kind of step in a little bit earlier. So that's kind of one of our biggest lessons from our first fund, which is smaller, is we were able to get that access, but we left a lot on the table because we have these really deep relationships. For our next fund, the goal is to really lean in a little bit more with larger check sizes and better governance so that we can really be an active part of their success on the investment side as well.
Yeah, no, that's helpful context. Just thinking through how the Fiat kind of growth engine is a funnel to Fiat Ventures, and maybe just taking it one level higher again. You know, how are companies and founders coming to Fiat Growth in the first place? How are they hearing about it? How are they getting introduced to the brand?
Yeah, it's interesting. One of the best is from our VC friends, like Equal Ventures, right? Is people who have worked with us for a long time. They've just deployed some capital into a company. And unlike 2 years ago, where you would want to build out a full-time team, now it's really important to build the foundations, especially for growth and especially as you need your runways to stretch out. So VCs know like you should go work with Fiat Growth for 6, 8, 12 months to build foundations, see what works, and then you can make a better full-time hire because you're able to really get that engine moving quickly in a more efficient way. Also from founders, right? So people that we've worked with, we've built a very good reputation and are fortunate to do so where founders know if you really want to be successful, particularly within the fintech sector, go talk to Fiat Growth first. So a lot of it's VCs, a lot of it's founders, a lot of it, we're starting to build these robust relationships with larger channel partners and corporates who have their own programs, and they're thinking about ways to outsource that to us so that we can take on a lot of those responsibilities for them and be an extension of their network. So a lot of it's word of mouth. We try to build out a strong brand so people will think of us, but it's from, the VCs and founders in our network who are just recommending this to their portfolio companies and their friends.
Got it. That's helpful as well to understand where folks are coming into that very, very top of funnel in the many orgs of Fiat. And I guess maybe to that point, I also hadn't realized that there's also Fiat Advisory. And so, what is Fiat Advisory and how does that, play into the various orgs that are Fiat Growth and Fiat Ventures?
Yeah, definitely. So Fiat Advisory is one of the newest offerings that we've rolled out. And similar to what we've done in the past, Richard's, launching Fiat Ventures, we see these things happening organically. So I'll give you a quick long story, but we started Fiat Advisory because we kept seeing these pre-seed stage companies or angel stage looking for advice, but they're just not ready to take on a full breadth of growth services. They're looking for product market fit. They need really key people to open doors and unlock things and build a strategy. They're not ready to have full hands-on support. On the flip side, we have a ton of operators in our network that we've worked with in the past when we were at, the SoFis, Ripples, Chimes of the world, who want to engage with our network and want to work with early stage companies, but just don't have the time to source those opportunities. And quite frankly, don't like to negotiate a lot of that either. So we've created a marketplace to connect the two. So it's primarily pre-seed stage companies who are looking for a really great subject matter expert, connected with now over 150 advisors in our network that we match them with. And it's not just like an advisor, let's make a phone call, but these are 1099 employees that we've onboarded to our platform and that go out on our behalf to work with these companies. And that's what we call Fiat Advisory. We hired Adrian Hunter, who is a former founder himself. He's our GM of this product, and he's done a phenomenal job in getting this from 0 to 1. And now we're starting to see scale. And I'll tell you this transparently, Richard, like there's some selfish reasons in here too, where Fiat Advisory then becomes an incredible feeder to our consultancy as companies continue to grow. They're exposed to our brand. And in Fiat Advisory, we're going to get another 40 to 50 rights to invest per year at the earliest stage, which feeds into our venture capital fund. So it does create this nice little ecosystem play for us at the earliest stages. And even zooming out from Fiat Advisory specifically, we see these things happening over and over again. And when we miss them half a dozen to a dozen times, we think like, all right, what do we need to do to put something into place? And what we do is we hire the smartest people we can from our network who are operators themselves, who really fit our culture, and we stay out of their way, right? We give them everything that they need to be successful, whether it's a new service arm or a brand new operating, functioning department like Fiat Advisor. And that's really been our big part of success. I think sometimes people ask, like, where do you spend your time? Because there's so much going on. Well, I manage our fund. Drew and Alex kind of oversee a lot of the different businesses, but we have managing partners on these different groups that also help, us make sure that this is scalable. And that's all credit to all of them. I get to talk to you about what we do today on this podcast, but I'm a very small piece of a much bigger organization that is doing an incredible job on their end.
Yeah, no, it's really helpful to get a sense for how the three orgs and if they are more in the future and product offerings kind of interplay together. And it's great to kind of see you kind of start off from a consulting side basis, realizing the value you're creating for your clients, and then also just like, hey, let's capture some of that value in a more tangible way via the Fiat Ventures offering. I guess one thing that I forgot to mention here or ask in the beginning is how should one think about the check size and the round stage focus for Fiat Ventures as a good entry point for Fiat into a new startup?
Great question. Yeah, so typically our sweet spot is seed, right? So that's where we're able to see some sort of signs of product market fit, especially if you're a team or a founder we haven't interacted with in the past. Like I mentioned, if we're working with someone, we get to see these data points over a 6 to 12 month period. If we're just engaging, we like to see a little bit more. So seed is a great entry point. We will do some pre-seed if we have a ton of conviction behind the team or if we've worked with you in the past or see really great founder market fit. And then we will do these standalone co-investments in this early growth stage. If you're a client of ours, we see something special, but it's just too late stage for our fund. To your initial question on check sizing, for fund one, we had a lot less capital to deploy, so we're looking at anywhere from 250 to 500,000. For fund two, which we're going to start deploying in the new year, you're looking closer to like 1 to 1.25 million dollar check sizes, closer to that kind of 8 to 12% ownership, and really kind of looking at that seed stage while reserving capital and behind that. And as you know, and a lot of different fund managers know, our goal is to raise this fund around that early stage, and then we'll often think about after that if we want to, go into opportunity stages and start to look up funnel a little bit more. We've now done 9 co-investments in that early growth stage, both because they're incredible individual investments and we try to bring a lot of value to our RLP investors, but two is it helps us build track record as we think about those future opportunity funds as well. So that's at least where we're at today. Is I'd say 1 to 1.25 in a seed stage, but over time our goal is to continue to kind of expand outward from that.
Yeah, no, that makes sense. And oftentimes folks on the LP side can be quite helpful to the portfolio companies that you then make investments into. It'd be great to get a sense of, and I'm not looking for names to be very clear, but types of
Yeah.
LPs that are in the fiat ecosystem for founders to kind of take advantage as well.
Yeah, for sure. We're actually coming up on our first close of the second fund, so we'll be able to announce some names here in about a month's time. But I'd say it's like a third, a third, a third, and it's really evolved since our first fund. But a third, like high net worth individuals and founders who we've worked with in the past and who bring a ton of strategic value to what we're doing, either as operators or founders themselves. Another third, traditional institutions. So you think of like multifamily offices, even single family offices, fund to funds. And then we're finding a really strong fit right now, a third with corporate venture arms. So these are large financial institutions who invest in traditional VCs because they want to get exposure and access to what they're investing in their portfolio companies. For us, we have this saying and pitch of get 3 VCs for the price of one because you invest in ventures, but you get exposure to Fiat Growth, our consultancy, and Fiat Advisor, our advisor network, and everything else we build. And we're seeing a lot of interest there. Less so because we're meeting them for the first time, more so because we've been working with them already for the last several years as operators and as consultants too. And so they are able to see how this flywheel is spinning and almost see that as a way to embed themselves within our ecosystem. And then we can build these really robust, individualized structures for them. So that one's a little bit newer for our second fund. We're seeing a lot of great traction. I'm excited to share more names once we get past that first close and get some folks in the door. But I'd say it's about a third that. Great founders, great individuals who see us, traditional institutions, and then corporate venture arms who are looking to tap into our broader ecosystem.
Got it. No, that great mix hopefully provides value beyond the capital. I think on the LP side as well as the founder side, plenty of opportunities to go get capital. And so I think the question is always why choose Fiat, why choose Eco, why choose anybody else? And so having some sort of differentiation there makes sense. And I guess that kind of leads to my next question. I was going through your site last night, and one of the first tenets you have there is operators first. It's like prominently featured in your site. What does that mean exactly for Fiat?
Yeah, it's a great question because I think almost every VC puts it on there, either operators first or like founder first. We're super friendly. Um, to us, it means a lot of different things, but mostly it means supporting where we can support best, to not overstep in areas that we shouldn't. We are here to provide one, a growth engine. That is something that we're really good at. Now, we don't overstep. It is truly a founder's responsibility to will something to existence. We're always available to provide recommendations, but ultimately it's on you to tap into this engine, and we spend a lot of time to so that people know exactly how to do that. But two, it's everything else that an investor should provide. Key hires, structuring around employee equity, some of these things that are a little bit more nuanced, especially for first time or founders who don't have as much experience in a lot of these intricacies. It's truly being hands-on, going out there and making things happen. I'll give you a perfect example. I'm going to be in Vegas again this week at ITC. It's a large insurtech conference. I've got two portfolio companies of ours who have set me up with four different meetings where I'm meeting with potential product and distribution partners for them on their behalf on the ground at this thing. And that's just one example of many where for us, because we are all former operators and today consider ourselves operators, we are truly building a startup consultancy and a startup venture capital fund. It's more than just, being out there and feeling like we're check writers and connecting and networking. It's being hands-on to help these businesses get off the ground. And we are very fortunate where it's not like we're past operators. We are truly get to do that today because we have this massive team of operators. So we get to see what works within the market, not 2 years ago or 5 years ago or 10 years ago. Literally, we get to see what worked 2 weeks ago and how do we replicate that in different aspects and different business models. So it does provide us a little bit of a unique value. And it's something that we love and we take super serious.
Yeah, no, that makes sense there. And I guess, going back to like the precursor question, I guess, in terms of, differentiation and value add, you kind of alluded to it there in your last response. I guess, how does the team's background as operators and advisors set Fiat Ventures apart in the venture world? And maybe even more specifically within the fintech venture world? Because obviously you guys are fintech focused.
Yeah, the way that we put it kind of succinctly is it allows us to invest in fundamentals and not trends. Like our goal is to, as operators, and certainly working with anywhere from 35 to 50 companies at any given time, we're able to determine what is actually happening within a market or within a particular company, as opposed to just trends of what you see elsewhere. And that allows us to de-risk the most risky stage of investment in that seed and especially in that pre-seed stage and as you know this, the rule that at least we invest towards is the power law, which means that if we're right 1 out of 10 times and we are a 1% quartile and top quartile fund, and if we're able to de-risk ourselves 5 to 10 to 15 to 20% because we're able to see things at a different level, that dramatically improves our ability to invest the right way. So long-winded answer of it's to us, it's all about investing in fundamentals of a business or a sub-vertical or an area. There's been several occurrences where we have passed on investments because we saw something at the ground level or we saw something working in an ecosystem where we decided to work with a couple companies to better understand a sector we thought we wanted exposure to. And that allows us to back off when we see something that may not be an attractive investment parameter, whether it's regulatory or competitive pressures or barriers to entry. But then if we do see something we like, we can really accelerate. So a little bit of a rambled answer, but the short answer is for us, it's to be able to invest in those fundamentals of the businesses, of the teams, of the founders, as opposed to just saying like, hey, I saw this company do this, or I read this thing, we should go and try that out next.
Yeah, yeah, no, that's helpful. I appreciate the ramble because it gets deep into the weeds, which we like to hear here. And then yeah, maybe just getting more tactical here. It'd be great to just get an example of how a portfolio company or more, if you'd like, have benefited from the Fiat Growth offering. I've now gotten a check from Fiat Ventures, whether or not I was a Fiat Growth client or not. How have you been able to leverage that in at least one company's benefit?
Yeah, this is the best part of the job, Richard, is there are so many different examples and we were just at Money 2020 last week and recorded some of our founders because we hear these stories over and over and it's hard to reshare those. So we want to make sure we can. I'll give you one. There's a company, Lunch Payments. We participated in their seed. They started working with our RevOps or our sales operations team. Their goal by end of year was to have an LOI signed with a channel partner. They're now in full integrations with three channel partners and have plenty more in the pipeline that they've gotten to because they've worked with our engine that can help them really set the right processes and cadence and outreach for these types of distribution partners. That's one of many. That's an example of one that we saw a business, we got to know them really well, we invested. They decided to lean in with some of our services, and that again kind of de-risks things because it helps them really, get to a stage that they didn't think they'd be to until, the middle or end of next year. Other examples, right? Like Copper Banking, we led their Series A. We'd worked with Eddie and Stefan really since they started the company as advisors and as operators, they're one of the key reasons why we decided to start this venture fund in the first place because we're starting to see these signs of a rocket ship and just didn't have any ability to back them any meaningfully. So we're able to invest in their seed extension in Series A because we built this long-lasting, really deep relationship. And we were able to lead that last round because we were able to preempt the market. We saw something really special going on with their distribution and channel partnerships and their roadmap. We were able to get there before a lot of other people were able to and kind of lead that. So two examples right there of these phenomenal companies, but we've got a ton more. And some really lean on us to really do a ton of their services, and that is very helpful for them. Some of them just call us up every month and say, "Hey, do you have an expert in this?" And we'll say, "Yeah, let us connect you with our head of life cycle." So it's really kind of one off and nuance. Not everyone needs, full growth support, and nor do we require that. It's really kind of dependent on the particular company and their own individual stage.
Yeah, no, I think that that's super helpful because obviously, founders who will be listening get a sense of, what value they can expect from you. But I think also on the co-investment side, I think, we always want to, work with folks that we like, but also folks that we think can be additive to us. And so if folks can provide value to the company that can only increase the chance of success, then, you're more likely to have other folks want to work with you from a co-investment standpoint as well. So it's been great to hear those data points. And yeah, I guess it'd be speaking of actual investments. It'd be great if you could just walk us through a recent investment, irrespective of where it came from, whether it's Fiat Growth or not, and then what gave you the conviction to say yes and make that investment.
Yeah, definitely. And this might be one that is shared by the time you publish this. If not, then that's okay too. Company is called Conduit. It's a team that we've gotten to know for a long time. One of our key theses is that fintech is no longer just another, app on your smartphone that you can use to reinvest in something or save money. It's truly at a collision course with every adjacent vertical, healthcare, future of work, climate mobility, and in this particular case with film and entertainment. So a lot of these studios as a whole, despite the writer's strike that we're seeing today, you're seeing a ton of competition for just organic content. And what that does is it's create a lot of these different bifurcated systems where everyone still manages their finances on Excel sheets in a bunch of different tools. And there's not really like this really core app around finance. Enter these two co-founders who have been working in this space for a long time as controllers, as product leads, and what they've done is they've created a way to better embed financial operating software, starting with things as simple as tax credits and monitoring of transactions, so that it naturally embeds within these management solutions for film and entertainment space. It is such a particular niche, but one that is so antiquated that still relies on a lot of just traditional processes like physically clocking in and clocking out and still having to use Excel to manage these projects. It's just one example of many. We came in and we led their pre-seed alongside a couple other really great firms, Aperture and Collide Capital, and are really excited. So all the things we look for: founder market fit, really deep understanding experience within the sector, a sector that is newly being digitized but still doesn't have a core financial operating system or system within it. It's an embedded structure, and they already have deep relationships with a lot of the major studios and local studios. And those are all the things that we look for when we want to back these kinds of teams. And super excited for what they're doing. That's the Conduit, Conduiit, and we're excited to have folks hear a lot more about them now that they've got some capital and go get back to building.
Yeah, I think getting back to building is the founders and teams always desire. And so, particularly in this kind of market where, fundraising can take a lot longer than you expect. It takes a toll, it takes off the business. It can harm and hinder the ability to continue the sales growth you had previously. And so, being able to also help and catalyze around for founders is another thing, particularly that any investor can be integral in providing for that founder. And that sounds like that company is in a really good spot now. But I think it's still early, and most companies that we invest in, have road bumps, speed bumps, face more roller coaster like trajectory than up and to the right to traditionally. And so it'd be great to just another example of a company where you made the investment, the company was on a precarious path. Maybe it was failing completely. Maybe it was on the verge of shutting down or running out of capital, but ultimately was able to figure something out or something changed that ultimately led them to obviously a I don't know, successful outcome, or actually maybe just a different trajectory that you're more excited by now than you had previously thought it would be.
Yeah, I'll give kind of like a broader like situation because this has happened across many of our companies, and then a specific example. The changing of the guard over the last couple of years have made the way in which you go out and acquire customers very, very, very different. So, 2 years ago, you're willing to spend a lot more money on paid channels. So Facebook, Instagram, TikTok, because you're anticipating raising more capital in the future, and investors are more interested in how many users do you have on this platform versus what is your customer acquisition cost and what does your runway look like. And one example of that was a company that we invested in through a co-investment. So this is a standalone in their Series B called Simplest. And this is a company too that we've worked with for the last couple of years and continue to work with today. They were the fastest growing mortgage and mortgage refinancing originator in existence. And certainly from a tech perspective, where they hit $1 billion in a very short amount of time, enter interest rate environments that really significantly increased that cost and almost completely slowed down their funnel. This is a moment where most people may start to panic and say, you know what, it might be time to kind of slow things down and try to weather this storm. What they had done in a really bright way, and this is why we wanted to back them financially, is the loan origination system called an LOS. They created this originally knowing that it's something that they might be able to break off and white label into the future. The last LOS that really got developed was in the mid 90s. It's these antiquated systems that still are the reason why people like you and I, if we want to take out a loan for a mortgage for a home or refinance, someone has to come over to your house. You sign about 100 documents by hand. You give them fingerprints of it. It's still this really archaic process where everything else is much more digitized. That has become such an efficient channel for them. They completely pivoted from this focus on direct to consumer mortgage origination all the way over to this LOS system, which they call Sonar. They now have over 20 customers, which we've helped them develop their sales funnel to get out. They have some of the largest originators in the country who are starting to use this product because it's more efficient than their own internal processes. And it's just one example of many of you look at a company who had a particular product focused on consumer, they went over to more of an embedded play. Another example for you, we just invested in their Series A called Wagmo. Pet insurance, the first to break out pet wellness and pet insurance. They were going after consumers directly. They started to run into a lot of challenges there with just competition. If you go on Google right now and type in pet insurance, you're going to see like 6 or 7 different companies pop up. What they did really well is they've embedded themselves within these employer networks. So we've now been able to help them on their sales and revenue operations cycle embed themselves natively within the onboarding flow. So you sign up, I get health, I get dental, I get vision, I get pet right there at that time that you're flowing through. Their take rate dramatically increases from what is traditionally a 1 to 2% up to the mid 20s. That was something that we worked on them very hands-on with to help them understand both the pivot to that B2B to C channel distribution, as well as setting up their sales funnels and operations, as well as getting connected with the employer channels that actually help them embed them within their solution. So again, kind of got deep on a few different things, but those are just a couple examples of many of people just changing their acquisition models in unique ways, and us being a little bit more hands-on and them bringing that to life. And it's worked out very well for all those different examples.
Yeah, no, as you mentioned, two, I think, very interesting points there. One on the macro challenges, right? Like literally in the instance of the mortgage company, like there's literally nothing they can do to change what's going on with interest rates, like completely out of their control. And so, being able to kind of be nimble there and understand how to navigate that scenario, it's very impressive to hear and seeing how they didn't die, honestly, because as you alluded to, many companies would have perished in that scenario. And then two, on the Wagmo side, where yeah, I think when most people hear, let's say, this podcast in a few weeks or so, they think of pet insurance companies or something in the pet space. Like, aren't there 17 of these companies? Like, what's Marcos doing here? And so,
Yeah.
understanding what they're doing differently, how they're having a nuanced approach and finding their core value prop makes a ton of sense. And seeing how they've been able to navigate, say, muddy competitive waters is important to hear.
Yeah, definitely. And I share these examples with you, Richard. I had very little involvement in the actual success of a lot of this. We hire some really smart people who are incredibly talented and let them do their thing. So I get to take the credit, or not credit, but share these examples. But truly, it's on the backs of these phenomenal just growth operators.
Yeah, at the end of the day, look, the founders you invest in, the teams that you invest in, have to execute on their own. There's a reason why you chose them to back, and so there's implications there as well. And I guess when they be concluding on this deal front here, I guess, how do deals get done internally at Fiat? Is it the Marcos stamp of approval? Is there an IC? Is there voting? Individual GP conviction? What exactly happens at Fiat to kind of stamp a deal to say we're going to do this deal?
Yeah, definitely no Marcos approval. So for if there are founders still listening to this, I'm happy to connect, but I'm not an army of one for sure. So one thing that we've done really well, especially as our brand has continued to grow, is our deal flow, and not just deal flow, but like really high quality deal flow from founders has continued to accelerate. So we've put some processes in place to make sure, just make it more manageable for us. Huge shout out to Caitlin Keep. She's a VP on our team. She's really a huge part of our success as we think about scalability, including this investment process, the CRM that we use to track these things, and how we go about making decisions. Ultimately, we've got a three-step process from initial conversations, additional due diligence, deeper due diligence, pitching to our IC, and a final go, no go. There's four people on our investment committee that make these decisions. It's myself, it's my two co-founders, Alex Harris and Drew Glover, and then Caitlin as well. We feel it's really important that it's not just GPs making decisions, but she feels like she has a voice. And to her credit, she's got a really good one. And so what we do as a group is we make these decisions as a group. Now, one thing, and I know you know this, consensus never works because there's always these examples that we hear historically of that one person who pounded the table, and that was Coinbase, that was Robinhood, that were these things that were these outliers at the time that proved to be really successful. So we will allow that if one person wants to bang the table, then they can will something to existence. But we've created a really healthy environment of like debate. And sometimes when we know there's going to be a contentious one, it's so funny. I'll start the meeting by saying, "What's the most overrated topping on a pizza?" And just like for 5 minutes, we just go, or like, what's the most overrated show on TV? Something to just like a friendly conversation to create banter. And then we'll jump into IC because you want to create this environment where people feel like they can challenge each other's assumptions, ask these really tough questions, and make sure that we're having a healthy debate behind it. So again, that's probably more info than you're looking for, but really it's both us all working together. But at the end of the day, if there's one person who has a ton of conviction, they can take that. But I'll tell you, we all have our strengths and weaknesses as far as sectors we know or ways that we look at opportunities. I have been wrong, I have been right, but I have definitely been wrong. And so we all kind of know where those blind spots are. And again, I know you know this, but we get better with every single investment we make. So we spend a lot of time focusing not just on what has gone right, but what did we learn from that investment, especially if we lead it? What could we have done better? What did we miss? If things do start to go sideways, we talk about how can we help them succeed, but also if there's something that goes too far, we talk about what did we miss there. In some cases, there's a lesson learned. In some cases, this is just venture, and there's a lot that you can't predict. But it's making sure that we spend time not just talking about what's going well, but what we can be doing better.
Yeah, no, that's helpful to get inside baseball in terms of how deals get done and are executed internally, and also just like who are the voices in the room deciding. I think oftentimes a founder may feel like, hey, if I'm not talking to Marcos or a GP, then I'm wasting my time. But it's almost always the opposite case in every venture firm, where the person that you may think is least important is actually most important, and doing the diligence and can actually be in the GP's ear and saying, hey, like this is what we should really kind of push hard on.
Just on that point, Richard, that I always tell founders is the worst thing you can do is just come back out every time you're fundraising. To your point, like there's a lot of people who are your champions and then your decision makers, and sometimes they're both. But if you're a founder listening to this, just make sure you create some sort of cadence for yourself. It doesn't need to be monthly updates. It can be quarterly or some sort of ways that you check in on your own pipeline. But there's no worse feeling, and I know our LPs feel the exact same way, where you don't talk to someone for a year, they come out of nowhere and say, "Hey, by the way, I'm raising this next round. You got 2 weeks to make a decision." You're like, "Sorry, like it's just too much going on for us to make a viable decision." And then you don't hear from them. They're like, "All right, peace." And they come back 8 months later. "Hey, we're raising a bridge round. Are you interested now?" It's just not an authentic way to build those relationships because at the end of the day, we're investing in people and the trust in those people to will these things to existence. There's a lot more that needs to go on. But to your point, as far as like getting in people's ears, just make sure that you've got a constant line of communication with those that you feel will add the most value. And yeah, to find ways of creating that long tail of relationship, even if it's just newsletters or updates from here or there. So.
Yeah, no, I think that's exactly right. And maybe the last question, like just pure investment strategy, it's kind of more like an LP related question, I guess. But how does Fiat think about portfolio construction internally?
Yeah, so for us, we try to build what we call a diversified set of exposure across fintech, both true fintech, consumer, B2B enterprise, B2B to C distribution, and across different verticals from insurtech, healthcare intersections, future of work intersections. We've got a nice pie chart that kind of breaks it out, and our goal is to create a nice distribution across that. Goal being that you don't want overexposure into any of those verticals in case there is some sort of event, like we mentioned around interest rates that occurs and that just completely wipes out the entirety of a portfolio. So that's how we think about broad portfolio construction. What we do both on our consulting side and our venture side is we have these quarterly offsites where we get together and we talk about where do we think the market's heading next. And they're very complementary because that will determine the types of partnerships we build, the types of clients we take on, the types of investments we're looking for. And that forces us to make sure that we've got a clear understanding of where the market's heading next and where we fit within that and what type of exposure we want. The number one question a founder can ask is, what are your theses and does our business fit within that? There's a lot of different cases, and I know you know this, Richard, where LPs will say, listen, love the model. We already have backed 4 fintech funds. We're a little bit overexposed in that category. Let's catch up next year. That's wonderful transparency because we know, great, this is someone we should keep in touch with, but they're just overexposed. There's nothing we can do. Same thing with a venture fund. Ask, where are you in your deployment? What is your thesis? Do you already have exposure to this particular category? And if the answer is yes, then unfortunately, it's just hard for them to get conviction over an additional investment, especially if it might be competitive. So long-winded answer, there's a lot of thought that we put into our theses in these different sectors, and then we track that very actively to make sure that we're not overexposed in any particular category.
Got it, got it. And then in terms of just like how many deals you guys want to have in a fund, what does that look like for Fiat?
So for us, especially in the second fund, we're looking at anywhere from like 22 to 24 deals. That's like 16 to 17 in that seed stage, and then another like 6 to 7 to 8 in this pre-seed stage. With the pre-seed, what we do is we've created a program we call Fiat Labs. Essentially, what it is it's not an incubator or accelerator. It's just a very early check where you also get dedicated hours of resourcing from our consultancy and our advisor network. So we know in those moments you're very much in a 0 to 1. So it's us providing some better hands-on support at the earliest stages. So short answer is 22 to 24. You're looking at about 10% ownership, and that's deployed at least for our second fund across $55 million total vehicle, gives us about 48 million in deployable capital. And that's kind of how we've modeled out the way that we anticipate deploying that one out.
Got it. And then the last question on that topic is you mentioned the opportunity investments or the co-investments. Are those separate from Fiat Ventures, not in that 2020 to 24, or that is that inclusive?
It's separate. Yeah, great question. So for our co-investment strategy, those are typically A extensions through Series C. What we do on our side is we give our investors, our LPs, a 2 to 3 week period where they can commit allocation towards those. And then at that point, we'll open it up to just broader investors within our network. And that gives them early exposure to these types of co-investments. No opportunity fund yet. That's probably not something we're thinking about until 2025 or later as we get through this next fundraise. But definitely something that we're excited for, and we're always seeing these trends, right? These things happen organically, and in this case, early growth stage exposure. We're building up a track record so that by the time we're in market for it, we have a list of companies that we can highlight and showcase and say, this is what performance would have been if we had a dedicated fund towards it. But for now, it's just kind of, we call it like the cherry on top of the relationship. You get exposure to really great growth stage investments. And we have a lot more conviction behind them because they're previous clients of ours in those cases. So we are a lot more strict about how we think about those because, as you know, they're standalone investments. So you don't have the luxury of a broader fund giving you diversification. They're these standalone vehicles.
Yeah, no, that makes sense on that front. Put the data points together for a future opportunity, but if that's something you might want to do down the road. And yeah, and maybe switching gears now more towards just like fintech broadly speaking. Obviously, that's the focus of Fiat. Are there any particular theme or two or three that like is a focus for you all right now? You mentioned a few minutes ago you get these quarterly offsites where you talk about, hey, what's interesting, what should we kind of put on the back burner, and so what's top of mind for you at the moment?
Yeah, I love this question because it's something we always are looking for and thinking about. The last wave of fintech was very feature focused. There's this great unbundling of financial services, and a lot of that came to our smartphones as consumers. The next one's a lot more behind the scenes. So what we say is it's less about features, it's more about distribution. And I'll give you a perfect example. So the Atlantic just released an article, and the title of it was Airlines Are Just Big Banks. And what they expose is that United's Mileage Plus program is valued at about 20 billion. The company's market cap sits at 10. And it's not just United, it's American, it's Delta. They're making far more money from putting credit cards in people's hands as opposed to putting us in those seats. And it's just one example of many where it's not about credit cards. That's not unique. It's about the distribution of those cards in these organic ecosystems that have nothing to do with fintech. Delta and United, sure, there's finances involved. Those aren't fintech companies. And that's the way the world's evolving next. So we're looking for these types of companies that are building better data solutions, better lending solutions, better payment solutions in these bifurcated industries that are large themselves and that cater to these massive audiences, but haven't really found that unlock like a lot of these airlines have next. And to your question, specific examples, healthcare is a wonderful example of that. We have some really great investments that are really taking advantage of the newly digitized infrastructure across healthcare and these open standards, but have yet to really capitalize on these opportunities. That's a really exciting space for us because we're seeing these collision courses. A lot of these traditional vertical SaaS enterprises. So you think a lot of like prop tech or commercial real estate, multifamily tenants. It's these areas that are still being, managed by these bifurcated systems, but you're starting to find ways to really insert wedges in a more powerful way. So those are a couple examples, but surely it's not anything too nuanced as far as our exposure within prop tech, insurtech, healthcare, future of work, these different areas in commerce. But it's thinking about ways that people are building solutions to access those different environments and then create more natural ways for people to take on these products, and not in a particularly predatory way at all. It's truly like better underwriting standards. So example of this is like Sigo Seguros. They are providing better non-traditional underwriting for auto insurance for the Hispanic population starting in Texas. The Hispanic population in Texas alone just became the majority. So it's not just like the right thing to do, but they're providing better pricing, better servicing, and communicating with this audience in a much more authentic way that then is going to create 50 million new drivers on the road over the next decade. So again, I just kind of rambled and went into a bunch of different types of sectors, but this is how we're looking at the world. It's what does the world look like in 10 years? Who is building for that world? And what are the founders that understand those problems better than anyone else? And how are they providing those solutions within the ecosystems that people are already engaging in? I know that's a little bit vague, but yeah.
No, it's helpful. I think it also kind of points to a more broad theme, which is that like fintech is pervasive, period, full stop. And so we're now seeing across every sector. If you can see it embedded into airlines, you're going to see it embedded everywhere effectively. And so I think it's almost like fintech is its own category while also being a generous opportunity set because this can apply in, as you mentioned, a slew of different categories. And to me, I'll like flip my question around here. And so fintech is pervasive. We're going to see it across every category. Are there certain categories or instances of fintech that you don't want to see, or just is not a fit for fiat?
Yeah, certainly within Web3, we like intersection points, but we're not going to invest in assets themselves. That opens up a whole different set of constraints. Having worked at Ripple for such a long time in the crypto space, like we know where we draw our line there. No JPEGs or particular tokens or projects. Um, Outside of that, like what we look for is there has to be some sort of intersection with some sort of financial tool or service. And to your point, it's pervasive. It's truly extensive and a part of monetizing every single industry. But for example, we've seen some tools that help, fintechs better market. That falls outside of our specialty. It's more of a marketing tool. Or you see certain data tools that help people understand how to better target people. That's really great, but that falls more within a marketing sector as opposed to us or healthcare, for example, someone who's helping you, be able to better track diagnosis across these different bifurcated, industries and providers. That's really helpful in making some underwriting decisions, but it's not a core financial product themselves, and it's not a key strength of ours. So To your point, there's a lot of like similarities, but what we look for are those that are truly financial solutions because we feel like we at least have some sort of control and predictability over the future. Like we talked about earlier, it allows us to be able to de-risk things both before we make an investment and after we make an investment. And if it's in a space where we really don't have expertise or understanding, and quite frankly, the ability to help a founder afterwards, then it doesn't make sense for an investment because, there's not really much value we can bring to the table anyway. And yeah, we can't de-risk it in that sense.
Yeah, yeah, and maybe just capping off this like fintech theme question here, I guess. Is there like I'm sure there's more than one, but could you provide us with one example of like, hey, if someone's building this, Rich, please send them my way. I've been dying to see X or Y or Z being built.
At a high level, if you're building something that seems really boring for a very legacy vertical and is dusty, that is our jam. Like we're looking for things that are really like unattractive service areas that have recently been digitized. Bring that to us all day. Enterprise solutions, data solutions, that is all really good. Healthcare is one that we've had our eyes. I know I mentioned it a ton today, but there's a lot to be done there. Small story, but I worked on a lot of the Obamacare implementations back way prior to joining Silicon Valley companies in fintech. And I saw firsthand the amount of inefficiencies in that space is frustrating. And as a consumer, like you and I, and we've got kids, like we've seen this many times over. So if you're building within financial technology at the intersection of healthcare to help people better manage bills or pay for things, that is an area that we have a ton of passion behind. And then also like listen, one thing that we say is, we don't have a diversity mandate in our LPA. It's more in our DNA, and 45% of the teams that we have backed have underrepresented founders. And again, it's not because it's like the right thing to do and we can pat ourselves on the back or hit a mandate. It's because that's the way the world's going to look. The world's going to be much more diverse. So if you're building solutions that are financial focused but catered towards a particular audience in the future that is going to continue to grow, we'd love to talk to you too, because I think a lot of times people have a hard time in venturing. It's not the point of this podcast. We don't have to go through those stats, but they don't see a lot of people like you and I, Richard, who are writing checks. And it's not just about the representation on teams, it's the representation on investment committees. And so if you're building something that's catered towards a particular audience and you're looking for people who to invest in you who understand that, would love to talk to you. I'm sure Richard would love to talk to you too, but it's all kind of a matter of providing representation across the board. So that's a little bit of a separate topic for a separate podcast, but that's what we look for.
Yeah, no, I mean, I'm definitely aligned on that standpoint. And, diversity is just good math, period. No matter how
Yeah,
you look at it, the math works in your favor, financially, as well as in terms of just, social justice issues as well. And
yeah.
no, it's a great way to kind of move on to our next topic, which is, Fiat's still a relatively new firm, but, how has it evolved since its founding? And specifically Fiat Ventures.
Yeah, it's evolved a lot, right? So I would be remiss to say that we learned something from every new investment. We certainly learned something new from the first fund, and we're still deploying out of the tail end. But one thing is making sure that our ownership targets get up, that we can really lean in with these founders. Again, difficult to do with smaller pools of capital, but finding ways of doing it. Being patient with how we deploy, so not just cadence of deployment, but the amount of time we allow ourselves to really lean in with these founders. We've learned a ton there. Um, yeah, continuing to learn. Now, one thing that is very fortunate for us is the sum of our organization is greater than the individual parts. So naturally, as Fiat Ventures has continued to grow, our growth organization, consultancy, and the advisor network grows. So what we've spent a lot of time in is making sure that we've got really seamless processes across that, so that we don't overburden people by reaching out and finding out information, but we create these natural ways for that to be shared across our orgs and creating cadences of meetings, ways that we can access information through CRMs, making sure that people know how to escalate things over our way. So some of that is more blocking and tackling. And again, shout out to Caitlin Keep on my team who has put a lot of this in place. But we've learned a lot there. And lastly, we've learned a ton as we've taken on more board seats, right? So we've now led or co-led 8 of our 25 investments for our first fund. We learned something new from every single one of what we need to be looking for, how we're asking for things, how we carry ourselves, and we will continue to learn. But as you know, that creates a whole different level of responsibilities as well. So we're growing up, with every new investment that we make, and that's part of the fun.
Yeah, no, in the world of venture, we're just continuously learning, and hopefully that enables us to get better over time. And also enable us to hopefully, get lucky because there's luck's a big part of what we're doing here. And if we're putting ourselves in the right processes in place, we increase the chance of that happening for us. And so definitely
Yeah.
understand the continuous learning method within Fiat, but within the venture industry, broadly speaking. And, we're almost up here on time. And so maybe just switch gears to just a little more fun here. I'm looking over your shoulder here. I guess it's your left shoulder, and I see a Raiders helmet over there. And so, one, how are you feeling about your Raiders this year? We're also filming this on a Tuesday. The Raiders were on Monday night last night and did not fare very well. And so, how you feel about the team overall? And then two, obviously they were the Oakland Raiders when you were enjoying them. They're now in Vegas. What are your thoughts there? I know it's a divisive topic for folks that were in Raider Nation.
Yeah, a divisive topic, similar answer to both. So I'll start with the former around how am I feeling. I'm feeling terrible, Richard. I'm feeling awful. But it's the same feeling I feel every season. Where the season starts, I break out my Charles Woodson jersey, I wear it, I wear my hat, get my kids all dressed up. That's week one and two. Week three, jersey goes away, I still wear my hat. We still watch the game, we record it, we watch it together. My wife is converted into a Raiders fan. By the time we hit week five, six, seven, eight, everything kind of goes to the back. I didn't even watch the game last night, I'll admit to you. I was just hanging out with the family. I could have turned it on the TV, but I saw the score. Yeah, it's same thing with the Raiders moving from Oakland to Vegas. It's what you go through with the loss, anger, denial, and I'm in acceptance mode. So I'm just used to this now as a Raiders fan. I'm in acceptance of our season. This isn't going to be it. I'm in acceptance that they're in Vegas. I've been to the new stadium. It's a cool layout. Like Oakland was fun. It was close to us. The atmosphere at the tailgates was like nothing else you'll ever see. But it's cool, and I've accepted it. And I'll tell you, you'll know I'm a loyal person because I still rep Oakland very much so, or the Raiders at least. But yeah, I'm going through the stages of grief. So right now I'm probably somewhere between like frustration and denial and like just acceptance of the season. So
Yeah, well, it sounds
yeah,
like you go through these 5 series every season. So hopefully,
yeah.
one season they'll pay it off for you and not have you to go through that process. But
Uh,
no, Marcos, thank you again for taking the time to share the Fiat story with us. It's been great understanding the inner workings of Fiat, where you focus on fintech, and what makes for a good investment for Fiat. Thanks again, Marcos.
Yeah, thank you, Richard. And I'll give a quick shout out to you and Equal. When we were first getting this up off the ground, I joined your Slack community and got to know you too. And you all have always been so helpful for others. And it's truly feel this way in what we do, right? Is it's not just about what we do, it's creating a wake for others. And it's not just about the doors that are open for us, it's about opening them to others. And truly, you all have done that better than anyone else in the space. So thank you for all that you do. I feel like we would not be where we're at today if it wasn't for folks like you creating that type of cadence. And I aspire to do the same for people who are coming up, as we're learning our lessons too. So thank you to you. Thanks for letting me be on here and tell our story a little bit.
Yeah, no, thank you, Marcos, a bunch. And being an emerging manager, as we both know, is incredibly difficult and challenging. And if we can find ways to be support each other and work together, it's only for the better for all of us. And so,
For
once
sure.
again, thanks for the unnecessary kind words, Marcos. But I'm
Yeah.
looking forward to finding more ways to work together as well.
Yeah, absolutely. I appreciate it. It's rising tide principle for all of us. And yeah, thanks for having me on.
Awesome. Thanks, Marcos.